Thank you so much for attending Buying a Home, brought to you by Citizens. This webinar is brought to you from Brooklyn Legal Services Corporation A, or Brooklyn A's Consumer Economic Advocacy Program. Thank you for being able to join us. My name is Kendra Dunston. I am the Development and External Affairs Coordinator here at Brooklyn A. And Brooklyn A believes all New Yorkers should have equal access to legal services and to seek justice, make their voices heard, and overcome systemic racism and oppression. We were established in 1968 as a part of the war on poverty, and Brooklyn A believes attorneys have a critical role to play in combating poverty, inequity, and racism. Our civil legal services, organizing efforts, and educational resources assist our clients in their communities in defending and mobilizing against harassment, displacement, and gentrification, and asserting their rights. Tonight's program is brought to you from our Consumer Economic Advocacy Program, or CEA, where they prevent foreclosures and defend against predatory lending. They resolve tax issues with the IRS for low-income taxpayers and strive to ensure that vulnerable groups have strong safeguards in place to help them build and maintain assets throughout their financial lives. Additionally, under the CEA program, we have a domestic violence unit that helps with orders of protection, child custody, support, and more. Our other two practice areas is our preserving affordable housing programs, where we handle eviction matters, anti-harassment, fair housing claims, tenant organizing. And then we also have the community economic development program, where we assist small business owners with new and existing commercial leases. Advice on laws and options. We also help with nonprofit and corporation startup services, among many other services. Tonight, our presenters are Charles Healy, staff attorney in our CEA unit here at Brooklyn A, and then also Matria Thomas, our learning specialist from Citizens. And tonight we will be talking about the home buying process. And so we're almost ready to get started, but before we do, it's want to let you know that you will have an opportunity to ask your questions here in the Zoom. You can either chat them in the box on your screen there, or you can raise your hand and I'll mute you. But please keep in mind, we do our best to answer as many questions as we can during the live webinar. If we cannot get to all the questions, we'll leave you with contact information, so we'll get back to you and hopefully answer all your questions you have. So with that, I will turn it over to Charles.
Hi, thank you so much, Kendra, and thank you, Citizens, for partnering with us for this presentation tonight. So I'm just going to be speaking with you about a few different topics that relate to the home buying process. The first, as the slide says, it has to do with working with a licensed realtor or real estate broker. There's a fair amount of information on the slide, so I'll just go over the slide with you here together. So you may be working with a real estate agent or broker, also referred to as realtors. They must be licensed by the New York State Department of State, and they have to have completed trainings in order to bear those titles in their next to their name. A real estate broker has what's called a fiduciary duty to you to act solely in your interests, which includes undivided loyalty, confidentiality, full disclosure, and reasonable care. So a fiduciary duty is a special level of duty that basically a professional needs to have to the person that they're serving. It's just important to keep that in mind, that they're serving you. The broker, if they represent both the buyer and the seller, this is called dual agency. It's something that you definitely want to be aware of if it's happening. It must be disclosed in writing, and you must consent to dual agency. So it's very advisable to speak with your broker about that if that's something that's occurring during the course of the transaction. Generally, you want someone who's representing you as the buyer only, not you and the seller. Or if you're selling your property, you would want someone who's representing you as the seller, not also the buyer at the same time. So it is important to be aware of that. We can go to the next slide. So the I'm sorry, the next subject here is the role of the real estate attorney. Um, a real estate attorney doesn't just appear at the closing, but plays an important role throughout the home buying process. So again, just like with the broker and the realtor, like I said before, the role of the real estate attorney is they're a professional who is meant, their purpose in the transaction is to serve you. So I just wanted to make an extra mention here about sometimes as clients of attorneys, we're afraid to speak with our attorneys about just anything that you think might have to do with your situation or the transaction that's about to take place. But it's really important that you communicate with them and just keep in mind that they're the person who is serving you. The attorney is serving you. And so some of the things that an attorney might do for you while they're representing you in the transaction is they can negotiate the terms of the contract as well as drafting other legal documents. They can discuss how you'll take title to the property. So this is important to discuss with them and with other individuals who are involved in if we're talking about buying a home, you want to speak with them about this. Whether you'll be buying as joint tenants with rights of survivorship or tenants in common. Those are two very I don't want to say common, but those are two very, I should guess I can say popular ways to take title to the property. So you would want your attorney to explain the difference in those if it's not already something you've talked with them about. The attorney may also review mortgage documents and should be able to clarify certain terms if you're not understanding what they mean, or at least help you find out who could assist you in understanding what those terms mean. The attorney can also order a title report to make sure the title is insurable so that you can obtain title insurance. They can also check zoning regulations. They can review the survey of the property. They can, if you're thinking about buying a condo or a co-op, they can conduct due diligence on that. The attorney may also review and calculate different adjustments that relate to the property, such as taxes and other items that affect the financing of the property, whether on upfront or over the course of your ownership. There are post-closing items that they can handle, including ensuring that outstanding issues such as agreed upon repairs are resolved. So we can go to the next slide. So there's actually a lot of law relating to what are called required mortgage disclosures. This is something that relates to just getting information about the loan that you are looking at taking out in order to purchase your property. So some things I mean, there's a whole lot of different rules on this, but just some things that we're talking about for this presentation are 3 days after the home buyer submits a loan application, the mortgage lender must provide a loan estimate. If the estimates change, the lender must provide a revised loan estimate. And so you may have heard 3 days. The rules here are the federal laws that bear on these interactions set out pretty specific schedules for how things are supposed to go. So it's to help ensure that when you're applying for a loan and when you're getting a loan, it follows a pretty regulated process and you can go through that process with predictability with regard to timing and things of that nature. Under federal laws and regulation, prior to at least 3 business days before the closing, the lender must provide you with the closing disclosure, which includes the final terms of the loan, the closing costs, and the details of who pays and who received funds at closing. So those are some important things I wanted to talk with you about. I'll turn it now over to Matria from Citizens.
Thank you, Charles. Good evening, everyone, and I'm very excited to be here with all of you to kind of talk about how we can take ownership, home ownership rather, to from a goal or a dream to your reality, right? So tonight we're going to be discussing mortgages and the first-time home buying process, where to start, how to get a mortgage, and when you figure out if you're going to take out a mortgage, what best suits your financial situation. So, in the simplest form, right, a mortgage is going to be a type of loan that's used to finance a property. It's an agreement between you and your lender that gives the lender the right to actually take your property if you fail to repay that money that you borrowed plus interest, right? So, as you can see on the screen here, you have first-time home buyers, some questions that you may ask yourself. So, where do I even start? How do I get a mortgage that's best for my financial situation? So you can go to the next slide. If you buy, right, for most people, owning a home is going to be a dream. This is, you want the white picket fence, you want the dog, all of those good things. It's a place that you really can truly call your own. Okay. It's a place where you can start to renovate and make, your vision become your reality. You can own your pet without having to pay those renters fees. You can plant a garden. You can do whatever you want to do. Put a pool in your backyard, whatever makes you happy, right? You're able to do that once you own your home. It is also an investment. Okay. And what this does is it helps grow over time. You build equity with every mortgage payment that you make. And it also gives you the opportunity for your property value to increase too. Now, some few pros that we want to kind of talk about in regards to buying a house is that the interest that you actually pay on your mortgage may be tax deductible. So if you are paying your taxes and things of that sort, you definitely want to consult with your tax advisor to learn more about how that can maybe put some money back in your pocket during tax season. Now, with a fixed mortgage rate, your monthly principal and your interest payments, they actually stay the same the entire life of your loan. So you don't have to worry about one month it being one price and then the next month it changing. Now, in most cases, or I should say in some cases rather, mortgage payments are less than our rent payments, right? That's the hope. But with the economy now, we don't know. But in most cases, it is. Now, on the other hand, the biggest hurdle that we have seen or come to know when it comes to home ownership is going to be coming up with that down payment to make this your reality. So buyers also must pay upfront mortgage expenses such as closing costs that Charles talked about, as well as ongoing expenses. So property taxes, homeowners insurance, maintenance, and all the utility costs, right? If you're renting, something breaks in your apartment, you can just call your maintenance. When you buy, you are the maintenance. So you have to figure out how you're going to come up with those funds to get those things fixed. Now, in addition, typically, more difficult is going to be if you want to relocate. If you feel like, hey, I know I just bought this house, but I'm thinking I want to move to Florida, right? When you relocate and you own instead of renting, you're going to have to sell that house prior to moving, unless you want to take on that responsibility of maybe renting and becoming a you know a person that's going to have someone pay them, right? We go to the next slide, Kendra. So some important mortgage terms that you definitely want to know when you're starting this process, right? So we have adjustable rate mortgage. So this is also known as ARM. This is going to be a home loan with an interest rate that can change over time. Okay. Now, most of these loan features have an initial fixed rate period that typically go from anywhere from 3 to 10 years, after which, after that drill period is up, then it can go down or up as the market rates change. But typically, these loans have a lower starting interest rate rather than our fixed mortgages, and can appeal to be more suitable for home buyers who plan to move before their fixed period ends. We also have our APR, which is our annual percentage rate. This is the broader measure of the cost of borrowing money more than the interest rate, right? So it reflects the interest rate, any points, any mortgage broker fees, and any other charges that you want to get included in that loan. Now, when you are in the process of buying a house, you do have to get an appraisal. And the appraisal is basically telling you how much your property is worth. What is the value of this property that you're interested in? So normally when you get an appraisal, it's an estimation of what the property value is. Okay, this process determines the value of the home that normally reflects the home's age, the condition, the location, and any like upgraded features like the number of bathrooms, the number of bedrooms, if you have a finished basement, things of that sort. That all plays in the part of how much the appraisal will come back for. And then closing costs. So these are going to be the fees that you pay for the money, for the many services, excuse me, that go along with buying a home and taking out a mortgage. Okay. Most, if not all, are the responsibility of the buyer. And the total cost normally averages between 2 and 6% of the loan amount, depending on your location. Okay. We have our fixed rate mortgage. This is the most popular mortgage type, which features an interest rate that does not change over time or through the lifetime of the loan. This means that the principal and the interest portions of your monthly payments won't fluctuate. They'll stay the same. Okay. However, being as though this is a fixed rate, since homeowners insurance and property taxes may change, your total monthly payment may still fluctuate slightly. Okay. And then lastly, escrow. Escrow is basically an account that's managed by a neutral third-party company that makes sure that a transaction is handled smoothly and fairly. And after closing on your home, your lender may then set up this type of account for you, where you can pay your mortgage, your taxes, and your insurance all at once. So the home buying process. The first thing you want to do is figure out, right? If you determine that you want to start this process, first you want to make sure that you establish some credit. So how do you establish credit that you need to obtain a mortgage from a financial institution? So as a first-time home buyer, sometimes it can be difficult to prove that you have the credit worthiness, especially if you're young or if you're lacking that substantial credit history that lenders are looking for. So the best thing you can do is to always pay your bills on time, whether that's rent, utilities, cell phone bill, car payment, whatever it is that you have. Your bills that you are responsible for each month, make sure that you pay for them on time. Also, talk to your leasing office or whoever you're leasing your property through, and see if they have any of those programs where you can get rewarded by reporting when you pay your rent on time to the credit bureaus, so that they have that luxury of knowing, okay, this person pays their rent on time. So that's something that you can do as well. If you have any credit card debt, making sure that you pay down your credit card debt, make sure you pay that on time as well. Okay. All of those things will actually help improve your credit score, which will make you a more attractive borrower. Now, where do you come up with your down payment, right? Now, the standard down payment is about 20% of your home's price, right? You should have at least 20%. So if you are buying a house for 200,000, then you'll need around roughly 40K, right? That's a lot of cash, especially for someone who wants to buy their first home. So when you decide to buy a house, you want to investigate this. Okay, depending on whether it's going to be a fixed rate mortgage, an ARM, or any other type of home loan that you may be taking out, you may not need the full 20%. If you do, you may want to start saving up, budgeting, figure out what you're going to do to try to get that deposit there quicker. Okay. What is expected with closing costs, right? What am I expected to pay with our closing costs? So when you apply for your mortgage and you pay your closing costs at the end of your mortgage process, it's going to be adding up to a few $1,000s. Okay, these are going to include your first month's mortgage payment, your application fee if it applies, a fee for a credit check, title, search, and insurance, the appraisal fee, your lender and attorney fees, inspections, documentation preparation, property taxes, homeowners insurance. These are all going to be included in your closing costs. Hint the reason why it's so high, right? With a couple thousands. How should I structure my house hunt? So a good first step for first time home buyers is going to be to maybe call your local real estate agent who knows the market and can help you focus on your search, right? As Charles said before, they work for you. They should have your best interest at heart, right? There's no charge for using a real estate agent to help you find a home. He or she will receive a cut of that final sell price once the whole process is done. So your agent can have potential homes automatically emailed to you every day. Maybe you can create some non-negotiables or some must-haves criteria in regards to the houses that you want to look at, that you want to consider, and then kind of set up a day-to-day contact with your agent to tour them, to see like, hey, I know you sent me this house, can we go look at it, and kind of keep tabs on what's going on, right? How long would this whole process take? So typically it will take between 30 to 45 days to close on a property. Now, although this may be negotiable, if it is, you have to get it in writing. To Charles' point earlier, you do have to make sure we have a strict timeline of when these things have to be processed. So if anything is going to kind of hinder it, you want to make sure you get it in writing. Now, during this time, the mortgage processors, the appraisers, the home inspectors, the title agents, they are all involved in reviewing your application and the home to make this your dream come true. Okay. We can go to the next slide. Now, how do you prepare for buying a home? So we talked about the down payment, right? We know that saving for a down payment most of the time is about 20% of our purchasing price. When you think about that and you say, hey, you need 40,000 for a 200K house, that sounds unrealistic. I get it. I know, right? So the average first-time home buyer puts down at least 6%. Okay. Additionally, there are some programs that allow you to put down as little as 3%. Okay. How much you should put down will actually depend on your unique financial situation. So it's not going to be the same for everyone. So some benefits of putting down more than your minimum payment would be that you may be eligible for a better interest rate. You may have less money that you need to borrow, which will lower your monthly mortgage payments. And you won't have to pay that PMI, which is our private mortgage insurance. Some other options that you have is that we have our FHA, right? With FHA, that is the Federal Housing Administration, which provides loans. And those loans can require you to put down as little as a down payment as little as 3.5%. Okay. However, with FHA, you'll have to pay mortgage insurance, which typically involves paying an upfront mortgage insurance premium at closing, plus your monthly premiums for the lifetime of your loan. There's also home ready mortgages, which have a down payment as low as 3% and also allows you to use gifts, grants, and any certain other sources of income that you have coming in to help you with your down payment. Okay. Now with that, you'll need to pay your mortgage insurance for the lower down payment, but can usually cancel it once you have a certain amount of equity in your home, typically around 20%. We also have the U.S. Department of Veterans Affairs home loans, which are for veterans, active duty personnel, National Guard members, and surviving spouses. The VA loans require no down payment and no mortgage insurance, and they have limited closing costs. Okay. Many state, county, and city government offices offer down payment assistance programs, including grants, loans, and tax credits. So you may want to check out the National Council of State Housing Agencies, the U.S. Department of Housing and Urban Development, and the National Association of Local Housing Finance Agencies for more information regarding those. Checking your credit score. So you can use these resources here to figure out what your credit score is and if you have some work to do in regards to before you start to apply for your mortgage, right? So FICO credit score normally is on an algorithm of the scale of 300 to 850. You'll see we have Experian, Equifax, TransUnion. These are your credit bureaus that kind of work together to build your 3 credit scores. Okay, your credit reports that you have, I recommend that you spend at least some time every 12 months, once a year at least, pulling your credit reports and verifying that the credit bureaus are reporting the correct information. Okay, you can get your free credit report from freecreditreport.com that every year, once a year, you don't have to pay anything. You can get your full credit report and just make sure that Experian, Equifax, and TransUnion are reporting the correct scores there, and there's nothing that needs to kind of be disputed on their end. Okay, many would be, home buyers, right? They find themselves with flaws on their credit reports, from missed student loan payments or even paying a credit card payment late or not paying it at all. So before you go and apply for your pre-approval, you want to make sure that you're presenting yourself as strong and responsible and an attractive borrower. So just make sure that you pay attention to that. How can you determine how much you can afford for your home? You can use this chart here, okay? So we want to be realistic. We want to look at our budget and we want to be able to determine how much will we be comfortable with spending each month, okay? Even though you may get approved for a $300,000 mortgage, doesn't mean that you are able or be comfortable with paying those monthly payments. So you definitely want to be honest with yourself. Okay, you want to consider if you have any outstanding debts. You want to consider your credit history and your score. You want to consider your employment history. So if you are a person who leaves jobs a lot, right? Maybe you want to wait until you have been at a job for longer than a year. Something of that sort. You just want to make sure that you're being realistic with yourself. You want to look at your current savings. You want to look at your down payment amounts. So you want to make sure you're creating a budget. You want to look at your whole picture, your whole financial situation. If you're married, if you're planning on having kids, anything that's going to impact your expenses, you want to include them in your budget. Okay. A lot of experts recommend that your mortgage payment, including your home insurance, your property taxes, and your mortgage insurance, be 28% or less of your gross monthly income. So for an example, if a couple's gross monthly income is $10,000, then their mortgage payment should be minimum 2,800 or less. Okay. So that's something to look forward to. Knowing how much you can afford will actually help you narrow down where you want to look for your homes. So it's important for you to do some research on the neighborhoods that you're considering, look into factors that may impact your quality of life, such as access to public transportation, the length of your commute to and from work, if you have kids, the school system, the crime rate, anything of that sort. Even looking as far as to see if there's any upcoming development projects, because that means that you are going to be seeing a lot of workers coming around the property to get those things started. So if you get a mortgage and you determine that you want to start to refinance it, we do have some options that you can do. When you refinance your mortgage, it can serve you any of these four purposes here, right? Lowering your interest rate, changing your loan type, altering your overall loan repayment term, or cashing out equity. So when we're talking about lowering your interest rate, it's exactly what it sounds like. The current interest rates may be lower than when you first took out your mortgage, or maybe your credit may have improved. So maybe you qualify for a better rate. A lower interest rate means a lower mortgage payment and less interest paid over the lifetime of your mortgage. So honestly, if you can lower your mortgage rate even by 1 or 2%, refinancing could be or could make sense for your finances. Okay. Changing loan type. If you have an an adjustable rate mortgage, and you worry that the interest rates will rise, refinancing it into a fixed mortgage rate with a stable rate could give you a greater peace of mind, convenience, right? Altering your loan repayment term, besides having that standard 30-year mortgage, lenders typically offer 15 and 20-year options as well, moving to a more shorter term, which will likely increase your monthly mortgage payment, but could save you thousands of dollars in interest over the life of your loan. And then for your cashing out equity, that means tapping into your home's equity to actually access funds for home improvements, education costs, medical expenses, any debt consolidation, anything that you could think of. You can access your home equity as a loan or a line of credit, and that you can use through our cash out mortgage refinance option. Okay. Forbearance is when your mortgage servicer or your lender allows you to pause or reduce your mortgage payments for a limited time. For most loans, there will be no additional fees or penalties or even additional interest added to your account, and you do not need to submit additional documentation to qualify. You can just simply tell your server that you have a pandemic related financial hardship that's going on, or anything of that sort. Okay. Forbearance doesn't mean that your payments are going to be forgiven or that they've erased. You are still going to be obligated to pay and repay any missed payments, which in most cases may be repaid over time or when you refinance or sell your home. But before the end of your forbearance, your servicer will contact you about how you want to repay those missed payments. One of the biggest ones most recently was during COVID-19 when we had the mortgage relief. So a lot of folks that had mortgages, they were able to get that COVID hardship forbearance because you were experiencing financial hardship directly or indirectly due to the pandemic, or you had a federally backed mortgage, which includes HUD, FHA, VA, all of those loans that I kind of went over earlier. They qualified for the mortgage relief. So for mortgages, they are not federally backed. Servicers may offer similar forbearance options. So if you are struggling to make your mortgage payments, you generally just want to discuss payment relief options with your servicer on whether or not your loan is federally backed. Okay. And how can citizens help you? So we do have some great resources that you can use. We have the website that you can go to is citizensbank.com/learning, and there's calculators and things on there. So again, we want to be realistic. So put your financial situation in there and see what would be beneficial for you, or what would be affordable for you if you were to take out your first loan for your first home, right? We do have our goal builder home equity lines of credit, which I know it says we'll talk about that tomorrow, but what it does is the home equity line of credit is just basically taking the equity again from your home and making it into a loan or a line for you to draw on. Okay. With our goal builder, it gives you the access to those funds with lower interest and lower criteria. Okay. If you still have questions even after this seminar today, you definitely can find your local branch to maybe talk to a banker and their manager. But I also do refer you to our first time home buyers session, okay, that we have with our organization, where you can send an email over to the community ambassador program at citizensbank.com, and someone will be able to assist you with those questions there. And with that being said, this is just our disclosure, just letting you know, like, this is just direct information, general information. This does not, go over anything specific for anyone's specific financial situation. This is just me just giving you some knowledge there. But I think that I am done, Kendra. So I think I turn it back over to you.
Awesome. Matria, thank you so much for sharing your expertise and knowledge with everyone here tonight. I know I learned some things, so I definitely appreciate your time this evening. This is the time where if you have any questions, please feel free to type your questions in the chat box, or you can raise your hand and I can unmute you and you can ask your questions directly. I'll give a few more moments for anyone to type any questions or raise their hand. Okay, well, if there aren't any questions, I do want to say thank you. If there are questions you may think about later on and you may need some direction, please feel free to email us at info@bka.org. And if you would like to request the first time home buyer session, I did drop the email in the chat, and that's at community ambassador program at citizensbank.com. Thank you, Charles and Matria. I really appreciate you sharing, again, your expertise and your knowledge with us. I'm going to turn it over to Jennifer from Citizens. Jennifer, are you there?
I'm here.
Awesome. Thank you again for all of your help in organizing these amazing webinars that we have here.
Thank you. So I'm Jennifer Smith. I'm the Community Development Market Manager at Citizens in New York City Metro. I manage our financial education programming in the 5 boroughs of New York City, plus Westchester County and Long Island. We've really enjoyed partnering with Brooklyn Legal Services Corporation A for this 3-part webinar series. We have one more webinar coming up in 2 weeks on June 5th. The topic will be making housing decisions, talking through reviewing the options for affordable, safe, and secure housing. And that will be June 5th at 6:00 p.m. You can register via the QR code on the screen now. Thank you, Kendra. Thank you, Charles. And thank you, Maitreya, for joining us as a presenter tonight. We really appreciate your support and expertise. Thank you.
Thank you. Thank you so much, everyone. If there's nothing else, have a wonderful evening. Maitreya and Charles and Jennifer, get home safe.
Thank you.
Thank you.
Thanks, everybody.
Bye-bye.